Bank statement loans? What is that for a mortgage? Let's break it down. So you go into a traditional bank or lender, they look at your tax returns because you're self-employed and you wrote off a lot of different expenses with Uncle Sam. And actually, let's say you even have a huge loss on the bottom of your tax return. Does this mean you can't get a mortgage? Possibly. There's other options. And those many times are called profit and loss or bank statement loan programs. These are loan programs where we look at the deposits that you get into your bank statement, usually over the course of 12 or 24 months. And then we take in an expense factor to figure out how much that would look. And we do all of this in lieu of looking at your tax returns. So who can benefit from a bank statement loan? If you're self-employed or an independent contractor, those are all people that can be served with this. What's the difference between a bank statement loan and a traditional loan? It has to do with how the documentation is looked at differently. In a bank statement loan, we're looking at bank statements. It might be 1 or 2 years worth. And in a traditional loan, it might be a tax return or a couple of tax returns. And they're calculated a lot differently. Who are the ideal borrowers? The ideal borrowers for a bank statement loan is going to be somebody that, again, is self-employed, an independent contractor, somebody that's maybe paid with a 1099 instead of a W-2, and therefore you might be writing off more expenses, and we want to show more cash flow for you.